Hey, good afternoon, everybody. Bob Trade Genius here. If you're new with us, thank you for joining. And if you're renewing and you just got the indicators, thank you for renewal. And what I want to do here, I'm going to try to do three things in one video, if I can get away with it. One is I'm going to show you a sample watch list, a good one for you to put in for yourself. I'm using TradingView. You can use whatever package you want, but this is where all our indicators are sitting. And then I'm going to go ahead and I'm going to show you how to set up the essentially there's 5 indicators, and then I'm going to then show you the inside of it so you get the right settings for it, and then we can walk through kind of how to review your watch list every day for opportunities. So let's get started here. So I'm not going to get into a whole lot of detail on all these. I'm just going to blast through this watch list, take a picture, and I'm going to do this real fast. So here's page 1 from First Majestic down here to Merck, and then from ISRG it ends with Wheaton Precious Metals. So take a picture of that as well. And if you want to know how to take a picture, you can't really use the camera function in here. You're going to need to use a screen capture so you can capture the watch lists. And so I'm going to blast through them now for you anyway. So what I did was I took components from the ETFs, and most of these are top 10 holdings, so they get a lot of activity, a lot of liquidity. I'm not showing lottos on this thing, or special situations for the most part. That'll come in later videos. So let me just blast through these for you here. Okay, well, First Majestic Silver Miner, AK Steel is a component here for steel commodities. Arid Pharmaceuticals is healthcare. Allegheny Technologies is in the steel commodity space. Brooks Automation is kind of obviously it's an automation company, and it's also they make the fabrication tools for the chip sector. Coeur d'Alene Mining, corn, which is the corn commodity. Okay, 2 shipping companies are coming up here. Diana Shipping. This is the ETF. It's the emerging markets. Here's Eagle Bulk Shipping. So one ships certain commodities. Bulk shipping is a lot of the grains. Okay, here's Eldorado Gold. Here's the ETF GDX. Here's the ETF GDXJ. Here's the silver miner Hecla. This is the healthcare company Intuitive Surgical, also an automation company. J&J, everybody should be familiar with Johnson & Johnson. JP Morgan Chase Banking. You got Merck Pharmaceuticals. Nvidia is an automation company plus a chip manufacturer. You got Pan American Silver. You got PayPal. Okay, SAL is the silver miners ETF. SALJ is the silver miners ETF. Soybean, the soybean commodity. Square, the financial company. SVXY is the volatility, the short volatility. We'll talk about this. I'm not going to spend a lot of time on this one. On this video, but I'm going to talk about volatility in future videos. It's a tremendous opportunity for us to make a lot of money, but you have to kind of understand what you're doing with that. United Healthcare, USAS, gold and silver miner, and then here's the UVX, also volatility. Okay, here's Vertex Pharmaceuticals. Okay, here's VXX, Volatility Index, and then we're finishing up Wheaton Precious Metals. And so those are the stocks, and I have a whole variety here of sizes and for price. No commissions anymore, so you can buy as many shares as that you can. Just a note on that is, my thoughts on it is that you should have either you don't have to go any less than 10%, no more than 15% one stock in your portfolio. So 6 to 10 stocks. It gets too difficult to manage more than that, and less than that you're too concentrated. So that's kind of my thinking behind that. And then we'll talk limits and stops on a different video. So that's the watch list. I go through it 3 or 4 times a trading day, and there's also alerts. I'll talk about that here in a little bit. And then every night I look at it on the 15-minute to 30-minute and the 15-minute to 1 hour and a 4 hour. So let me go. It doesn't really matter which one I'm in. So I'm in weak precious metals. So for TradingView is that when you want to set up an indicator, you go to here. Okay, and then here's the ones that we have set up. So you should have access to the moneymaker. You can put the moneymaker in twice. That's what I do. This is a invite only. This JM3X. This is an indicator that one of our subscribers wrote, combined a few things together to save you some indicator space. And it's just you type in 3X Lin Reg and you'll find his indicator. Trade Genius Slingshot is an invite only, and the Trade Genius buy sell pressure is a invite only. If you only have 3 indicators, you have the free version. You want to go with the one moneymaker, the first one I'll talk about. You want to do the JM3X Lin Reg, and you want to do the Trade Genius buy sell pressure. If you do the other 2, then you add Slingshot, and you can add the second moneymaker. Okay. So what you do when you want to select something, you go into the single squiggly line, you go to the invite only scripts. There's a lot in here. One thing TradingView does that we don't like is if we create an indicator and save it, whether we use it or not, whether we update it or not, whether we discard it, it makes us keep them all. So you're just going to see a lot of them in there, and the ones that you're going to want to get access to is the buy sell pressure. You're going to want the moneymaker right here, and then you're going to want the buy sell pressure, which is right here. Okay, and then don't worry about the other ones. So you just select those in turn. So if you select the Trade Genius moneymaker, the first one, and if you can only do one, this is the one you want to set up. You go into settings, which is the gearbox right here, and then you want to go ahead to inputs. And what I do is I have a 65 look back period. If you only can have one of the money makers, you make your deviation 2 versus 3, because here when you're setting them when they overlap each other, you can show 2 deviations away and 3 deviations away. It's important because one of our tenets is to look for opportunities that are pushing away from the midpoint, and then we're looking for buying pressure and relative strength and stochastics to start coming in our favor. And then what we do here, we have a linear regression filter. You can see if we change it, you may see different things popping in and out of the signal here. You just couldn't see it this time, but this will only fire if the trigger line is more than 1.5 deviations away from the center line. So it keeps you from over cluttering your chart with a whole lot of signals. And these aren't be all end all. These are information to get you the best possible edge. So the trigger line and the linear regression filter just kind of weeds out the noise. And then what we do is a buy length of 4. That means it has to satisfy over 4 bars. And then we have the oversold is 20 for a buy, overbought is 26. That's the range in which the linear regression has to travel for it to trigger a moneymaker buy. On the sell side, we expanded to 6 because bottoms are more V-shaped, tops are a little bit more U-shaped for the most part. So we're looking for a bigger average, and we're looking for some extreme moves in the relative strength, so 89, 89. When you go into style, I turn all these plots off because you can see it'll just start getting very, very crowded here in terms of lines on your chart. And then you want to just check on the shapes. These are the shapes that you see. And so what we built here, this first one below bar, you notice there's 2 below bar. This one is looking at a recovery from a waterfall decline. So one of the hardest things to do is when the stock is really dipping is, you're looking for the opportunity to get into a trade. And a lot of times you get burned a couple times because it's just bear flagging it down. So this one's kind of a bit of an all clear signal. And then when you have the shape, see, when you go in here, you can shape it any way you want. We just happen to use a circle for this. And these are our colors. So you got circle, and then you got triangles, blue and red, up to you. And here's the background, as you can see how the background works. And you can set your color schemes the way you want. You can make them opaque or transparent. I like to have it a little bit more transparent. I want to see it, but I don't want it to dominate, because you can see what dominating does. It hides your price information. Okay, but you want the 2 standard deviation one to be darker than the 3, so it does overlay it. And so that's the money maker. If you can only have one, that's the one you want. It's going to give you the best opportunities down here. So you got a money maker buy right here, for example. On top of it saying a waterfall is over 2, and then you got a slingshot, and then it puts us in a position for a nice buy, nice run. So if you took that, here's 27 to 27.65, and it's still running. Okay, so if you're allowed to have a second money maker, this is something that I like. I use 65 and 2. You can have your linear regressions in there if you want. I turn it off. And then my buy length is for you guys 4, 50, and 40. I'll explain this in a second. And then sell length 4, 40, and 50. And what I'm looking for this for, if a stock is trending higher, is that the more extreme money maker will never find it because the relative strength will not dip down enough. And one of the best practices in stock trading is that if you have a trend, you want to ride the trend, but sometimes it'll get overbought and you want to take profit on it because you don't know if that's the end of the move or not, because you can't know the future. So if you do get an overbought signal and you want to take profit, then if you get into the buy signal after that on the second money maker, then it puts you in a position to be able to take the next ride on the trend again. So that's why I have it in there. And then the style, again, I keep these plots off. The shapes I use for this are circles instead of diamonds, so I can see the difference. I use different colors for myself, okay, but I keep the below bar in here as well. And I have that as a square, but I have a different color. And then a plot background is, you can see when it moves, is you just want it darker than the 3 standard deviation one, top and bottom. And that's the second money maker. What the money maker is looking for is we're looking for reversals in the relative strength. So we're looking for it to push through a relative strength area and then start fading back. So for the first one, it has to push through all the way down into the 20 area, and for the upside, it needs to push past 89 and come back for us to to be able to get a signal. So that's what we use. It's really good. Relative strength is a really good tool to see where you are in terms of your how the stock is running. The next one I want to show you is this is the linear regression line. Okay, now we have two linear regressions showing here. We have this one here, which came with the money makers. This is a dynamic. This is a static linear regression. So once that bar is complete, it stays put. This linear regression is dynamic. It's moving with the look back period. So if you change your look back period from 65 to 100, for example, it's gonna change the direction of travel. So I have it as 65. That's giving you looking back over the last quarter. But depending on how you like to trade, at some point you can shorten this or you can lengthen this. And so I have it set for 65. We have standard deviations of 1, 2, and 3 in here. Those are the lines it's already pre-done. You want to keep the extend lines on. You want to show the Pearson's R number, which is right here. This is basically showing you, if you think of a stair step, this is kind of rise over run calculations. And so it's giving you a sense of consolidation and trend. So, basically you can go from 0 to 1. And so the farther away from you get from 1 is the more extreme, from 0, the more extreme the trend is, up or down. There's no negative to this, it's one way or the other. And so as you scroll down here, you can also put the moving averages in as well. So I use 13, 48, 65. And when you get to style, and then I use for the VWAP, I don't have VWAP on here for this though. You also could go with EMA or you can go with weighted moving average as well, depending on how aggressive you want your moving average to calculate. For the styles here, the MA lines is that I'm going to click on 3 is 65. This is the most important one. In future videos, I'll talk about the 1348 cross, and also talk about the 48 one as well for terms of determining. Basically, the 48 is the most reliable back test for a long swing on a daily. So since we trade less than that, I don't get into it too much, but I use the 65 moving average because it gives a good sense of a bull bear line. Nice thing what we did here was we built in, if it's rising it's green, if it's falling it's red. And when you click on these things, now you want it opaque, now you want the line thick, and you want the color pronounced. Hard colors versus soft colors, okay? So you're at a football game, you're not at a golf match. And then you want the pine labels to show, and you want the pine lines to show. The pine is the program that's used here. These are the lines, okay? And this is showing you the basically center line 1, 2, 3 minus, and 1, 2, 3 plus. And how I use this personally is it gives me a quick reference to how the stock's been trending over the quarter. And for me is that when it catches up with the price, you notice the 3 matches the 3, or the 2 matches the 2, and the center line matches the center line. So our best practice is that we're always looking for, ideally, if it crosses down or around the -2 and you get a buy signal, or if you get multiple buy signals, you buy it. If you get down to 3, that's okay too. In another video, I'm going to talk about the different trends and consolidations and how to trade each one of those. But for suffice it to say, right now as you're getting up to speed on it, is that if you're at a minus standard 2 deviation, you're looking at 91% chance it's going to come back to the center line. Now it may go flat, or nothing says it has to rise. It just means that price is going to meet that center line. This is more of a 55, and when it gets to here, you're looking at 96%. This is the bell curve, right? And and algos trade off this stuff, so that's why it's important. So if it's trending up, it's okay to chase stuff that's bouncing off the center line. If it's flat, you obviously want to buy low, sell high. So that's how we use the linear regression. The slingshot's pretty cool because what we did here was we had, and we learned this. This is the very first indicator that we built. Is that when we're trading futures, we noticed when you get these moves that we call too far, too fast, and the stochastic stretches a great distance from its moving average look back, basically the K versus the D in stochastics, it presents an opportunity. And so what we built is the slingshot that is measuring that distance, and when it comes back in, and some people call it the J hook kind of a thing, with when they're looking at price, we call this basically the J hook of looking at stochastics. So my K period look back is 25, my D period is 5. Phil likes to use 50 and 15. You can experiment with it. Just use oversold for 20 and overbought for 80. And style, I like the squares for this. I use red and blue. And so what you're going to see in here, and right here you see Wheaton Precious Metals, is that we got a slingshot. They said this move here is basically, I'm a military guy, so this is kind of like your infantry outrunning your artillery or your tank support. Okay, so if the move is a little too far, too fast, algo may take you out, people may take profit. It's just a warning signal, okay? And this is trending slightly down. You get a slingshot sell. If you're along this thing and you got in around 27 to 27.65, you're looking at probably a 2.5%, 3% gain in 2 days. Hey, that's okay by us. You do that enough times, you're up 50, 60, 70% a year, right? So that's just a warning saying, hey, I got to sell on this thing, got too far, too fast. And if you don't want to close it, you may just now set a stop right below, the last obvious support area. And then you get on the next trade if that happens. So that's how we use the slingshot. We really like this a lot. And then the last one is buy sell pressure. And buy sell pressure is built off of the money flow index. And this is what I traded a lot on when I traded volatility way before Trade Genius. This is when the VIX, the XIV and all that stuff was first coming out in 2011. I just noticed that every time the money flow zeroed out and popped, and then if the moving average of that money flow also went oversold, it presented a good opportunity. So you combine the buy sell pressure with a trending market and gives you good setups. And so what we did here was the input on this is just put 100 for the oversold, 1 for the overbought. You can plot your linear regression, okay, or not. You don't need to. And you can use the linear regression if you want or not. I do not. And then when I go down to the trigger here is that, since it's off, don't worry about the trigger, is that you can use a 1 for length, moving average of 3, and the signal line is a 3. And I'm going to show you what that looks like graphically here. Let me pull this up. So this is what the money flow looks like graphically. Okay? And so what we did is if the money flow zeroed out and also the moving average of that zeroed out and you got a buy signal on it, it's the most responsive of all the buy signals. And so I like it if it's flat trending or if it's uptrending. I like to take it, and especially if we're down below 1 standard deviation, ideally if it gets to 2, but this is a good enough trade for me. When this thing hits like this, you're in the trade somewhere in this candle, okay? And then you just take that trade. So I like this well, and if I get confirmation like this, then I'm really excited, okay? Especially if it's pushed down below one of the standard deviation lines, because that means we have a trade that's possible. If everything's cluttered in along the center line, then I'm not as much interested in it. And so also, it'll also fire, and I'll close this a second so you can see this. It'll also fire when it gets overbought, like this. So if you're just trading that signal, you buy here, you close here, okay? You get another signal here, you buy here, you close here. You buy here, you close here. So it all depends on how aggressively you want to trade. And so ideally, if it's trending this way, then you're in really good shape. And let's see if I have anything else on that. So let me make sure I talked all the pieces. And then the style I use the diamonds, shape, colored blue and gold. And you can make these as transparent or opaque as you want. Okay. So those are the indicators that I use, and how I use them. And then so what you want to do is I have a ton of watch lists that I'm going through, but so if you just go through the watch list that I gave you, or you modify that, is that I like to look at right now, because the volatility index is down around 12. Trends aren't holding very much, so you start to try to move down in time frame, to catch your moves. And so, but I start off on the hourly with all these, and then I'll just scan. Okay, and I'm looking for opportunities. So when you're scanning through this like this, you can very quickly see if you like anything or not. So this caught my attention here, EEM. Okay, so we're at down -2 standard deviation. Money flow is zeroed out. We're at a fairly flat consolidation of 0.26, meaning that we're really not trending at all. So this will present an opportunity here. If I get another signal, either I doubt I'll get a money maker, but I mean a slingshot. But if I do, I'm looking for now a money maker, or I'm looking for a buy sell pressure, and maybe take a shot on this thing and see where this thing takes us. So we're going through here. Here I was just showing somebody on a training here. See double signal on GDX, signal on GDX. Even though it's trending down, the trend is fairly benign, and especially if it gets above 0.6 here, you're getting into what I call strong trend. If you get a 0.7 to 0.9, it's a really strong trend. 0.9 is what I would call a parabolic move, or a waterfall down. But GDX is providing opportunities here. So you look at buy sell pressure, you look at money maker, you look where it is, and these are the moves. So here I'm going ego here. We just so you know, we're in this trade, and we're riding this trade right now. Okay, so we got the sell pressure on it, but we just have a stop. We're going to move the stop up and see if this thing continues to move higher. Okay, so as I continue to move down, you can see a lot of these have made some runs already. So EM's of interest to me. J&J is an uptrend, so it gave a moneymaker buy for a trend. So if you've been trading this one, and you're fairly conservative, this is an opportunity. You can actually buy options as well if you want. It's above its moving average. See how it touches as and bounced off it. The 65 is kind of a bull bear line for me, no matter the time frame. Here's JP Morgan. So we keep looking for opportunities. You got Nvidia trending up. You got a moneymaker buy. Keep an eye on that one. Pan America already moved. See, this is kind of almost like a parabolic move down. 0.97, it's going straight down. You just kind of stay away from this one until it starts to flatten out a little bit. And you know, if you're an advanced trader and you have a trend down like that and you get overbought like this and it comes down, then these are opportunities to short it. You're starting to see some weakness in some of this stuff. This is SVXY. Get United Health. I think you get my point here. So there's just a couple ones to take a peek at and see if there's interest in. And VXX is its own animal, which I'll talk about at another point. And then there's Wheaton Precious Metal. We just talked about that one as well. So once I go through and flip through the hourly on that, if I don't see too much I like, I'll step down in time, and then I'll look for other opportunities again, and then rinse and repeat. When you do this stuff, it only takes a couple minutes to see if there's opportunities. Like AK Steel here. Okay, this is going to probably hit a slingshot here probably pretty soon. Watching the 65 line. This is setting up, still trending up on a 15-minute. So there might be an opportunity. We just took this trade last week and well, basically it was a day trade. We caught it. So we're not opposed to day trading. You get 3 day trades a week before they penalize you if you're under 25,000. So I will occasionally do that. You have to manage that risk yourself because I have no idea what other trades you may or may not be doing. And sometimes we'll call out a day trade. I don't know it's a day trade when I take it, but if we get a 3 to 5% move in one day after we get the signal, we may take profit. And that's our goal. You know, we average about 6.8% over time, but if I get 3 to 5% in a day, that's good living. Okay, I don't care if my average goes down on the sheet. If I'm turning these things around in 2 or 3 days, because we're just going to make more money. And so then I flip this way too, and I look around. And so sometimes the 15-minute will give you a lot more of these oversold opportunities for bounces. So once you go through it during the daytime, when the market opens, you can scan on the 15-minute and see if you can catch yourself a move. So I hope that helps. Put questions in the box. This is going to be just going to be unlisted for you guys. This isn't for the public. And then I'll refine my questions, or I'll do a follow-on video. But thanks so much for listening. I really appreciate it, and I hope this helps you get on the right track with Trade Genius. Have a great day.